Today, we're going beyond the typical headlines to give you a deeper understanding of Apple's stock, its financial strategy, and what really sets it apart from other tech giants. Apple's story has always been about creating revolutionary hardware, the iPhone, the Mac, the iPad, but what's often overlooked is that Apple is quietly transforming itself into a services powerhouse. In 2023, services contributed over 20% of total revenue, and here's why that matters. Services are high-margin, recurring revenue streams. They create a more predictable financial model, unlike hardware sales, which can fluctuate. This shift indicates that Apple is slowly decoupling its growth from iPhone sales dependence. While many investors focus on the launch of the next iPhone, the real long-term play could be Apple's increasing dominance in digital services and AI integration across its ecosystem. Think about it. How often do we hear about the strategic moves behind Apple Pay, its healthcare aspirations, or the deeper integration of AI into Siri and Apple's user interface? This is where the real growth story lies. We hear a lot about AI when it comes to companies like NVIDIA and Google, but Apple is leveraging machine learning in ways that often go unnoticed. From Face ID to on-device language processing in Siri, AI is embedded across Apple's product lineup. The key difference? Apple is focusing on privacy-first AI, building powerful AI features while keeping most of the data processing local to the device. This is Apple's ace card in a world increasingly concerned about data privacy. While competitors may gather massive amounts of data for cloud processing, Apple is banking on differentiation through privacy. This subtle but profound AI strategy will be a major competitive edge as privacy regulations tighten globally. Looking ahead to the next 12 months, analysts expect Apple's stock to rise by 15–20%, with price targets ranging from $239 to $300. But what makes this outlook particularly compelling is the widespread confidence among both analysts and institutional investors. Out of 36 analysts, 23 recommend a buy, and 12 suggest holding, reflecting solid market confidence in Apple's ability to perform. Major hedge funds are backing this bullish outlook. Hedge funds like Berkshire Hathaway hold massive stakes in Apple, with other key players like Bridgewater Associates increasing their positions in 2024. This hedge fund movement suggests that even the savviest institutional investors believe Apple is a long-term play, particularly as it continues expanding its services and AI offerings. For retail investors, aligning with these heavyweights could be a strong signal of confidence. Of course, it's not all clear skies for Apple. The company faces intense competition from Android manufacturers and regulatory scrutiny, especially around its App Store practices. Moreover, supply chain issues could continue to disrupt production, especially with increasing geopolitical tensions. But here's something unique. Apple's secret strength lies in its global supply chain mastery. While other companies falter during crises, Apple's deep relationships with suppliers and forward-thinking logistics strategies have historically allowed it to adapt faster than its competitors. This ability to pivot gives Apple an edge, particularly in uncertain times. Apple remains a tech titan, but its future isn't just about new iPhones. By focusing on AI, services, and strategic privacy, Apple is laying the groundwork for a new era of growth. With analysts maintaining strong buy ratings and hedge funds increasing their stakes, Apple seems poised for sustainable high-margin growth over the next 12 months. I am giving Apple a 4.5 out of 5, not just for its product innovation, but for how it's positioning itself for long-term success. If you like this video and want more like this, please help show your support by subscribing to the channel. Thank you for watching today's episode of We Asked AI.